Hi everyone, welcome back to this podcast. Last video we discussed about Zydus Life Sciences, and in this video we are going to discuss about the HDFC Bank, and the bank is struggling to acquire new deposits. So in this video we'll discuss the problems in the HDFC Bank. So the credit to deposit ratio of HDFC Bank is around 104%. So what does this mean for the HDFC Bank?
Okay, credit deposit ratio is the total loans and advances the bank has given divided by the deposits they hold of the customers times 100. That's usually a percentage point. So, but usually if you don't multiply it into 100, you just have the ratio, which is the number, which is 1.04. It means around 104%, which means a high credit ratio, meaning higher than 1 or 100%, means they've lent more money than they have deposits for. So RBI has certain strict rules about all this. They monitor this. The reason why they monitor this is to make sure the banks have a healthy liquid balance in their account. That means in case all the depositors at the same time for a reason run to the bank because they're scared and demand money, the bank has enough liquidity to pay the depositors. So shouldn't lead to a liquidity issue. Conversely, if you not have a very low ratio, that means a bank is not lending a lot.
Okay.
It's sitting on a lot of deposits, but it's really not capitalizing and utilizing these deposits, which it has to do business. It's not doing any much business. So for HDFC to improve its credit ratio, there is one way to do is increase the number of deposits or to get rid of loans, because either the numerator has to change or the denominator has to change. So RBI has been telling banks in India, please look into raising your deposits, and it's been a challenge in India right now because of mutual funds and social media and the influence of many aspects. People don't want to keep cash in banks anymore. They feel they'll get better returns in investing in the market, even in the short term. Even if I have, let's say, some cash which I only need next year, I feel it's better to go and do something in the market with that than to keep it in the bank, because the bank interest rates are not attractive as what I can generate in the stock market, is what people feel. So there's a drop in deposits.
And recently I came across a news that HDFC Bank is planning to sell around 10,000 crores of its loan portfolio to the mutual funds. And how can a bank earn income from the loan portfolio, and how does that loan portfolio selling works in the bank?
It's very simple. Let's say Karthik has borrowed money from me, correct? And every month he has to pay me 5 rupees. Principal and interest together is paying me 5 rupees. So every month I'm receiving 5 rupees. And let's say the loan is 500 rupees. So it's going to run for a few years.
Okay.
Correct? But I don't have the time to wait. I need that 500 rupees today. So what do? I'll tell you around, dude. You don't mind waiting for this 500 rupees slowly to come and trickle. I'll discount. You give me 450 rupees today, you take this. So every month you get 5 rupees. This is one way. But here what will be happening is they'll be taking all the loans, adding it together and making it one bundle. Okay, so they say this is amount of loans, right? So much interest is coming. Then I'll divide it into units. Then I'll say each unit will get so much every month if you cost of the unit is so much. Because no one person can buy $1.4 billion worth of loans from HDFC. So HDFC will find it hard to find a customer. So what he'll do is he'll reparcel it, put it inside the shredder, shred it, and he'll create one box. And he'll say each of this pizza slice is worth maybe 1 lakh rupees or 5 lakh rupees, and say for this 5 lakh you give me, you will get so much interest. And he'll show like an interest of 8%, 9%. Meaning these loans at an average, he must be earning, let's say, 9%, 10%. So he's giving you 8% back. He maybe keep a little bit on the table to make sure he can manage things. But the broader picture, what it's showing is HDFC itself is finding it hard to convince people to deposit money in the bank. They're finding it hard with such a massive customer base with so much high net worth individuals. Nobody wants to keep their money in the bank. They don't want to put deposits in the bank. So HDFC is also not able to attract customers to put deposits, to maintain that ratio, CD ratio. So they are coming out this way to lower the loans. By lowering the loans, they'll infuse cash and change the ratio is what they're hoping to do. This is a challenge where RBI and the banks have to figure out what to do to encourage people to leave deposits in their bank. What they'll have to do is offer better interest rates. This finally that's what will happen. One bank will start raising interest rates to deposits, all other banks will follow because there'll be competition amongst banks. Like you see, it happens with loans. As soon as they start cutting interest rates on loans, everybody will be cutting interest rates across the board. Same way, this will also happen.
And HDFC Bank is a major contributor to both Nifty and Bank Nifty's performance. So HDFC Bank is struggling with.
Yeah, but this is all short term.
Mm.
There's not any long term problems with HDFC.
Okay.
So it's not going to have any major impact on HDFC shares or the market per se. This is more a short term thing, which they'll find some innovative way to fix this. But it is a struggle. What, as an investor, you come to realize is that more and more Indians are flocking to the market. That means evaluations in the Indian market, which is already in an all-time high,
Yeah.
will go even higher because everyone now wants to participate in the market. Anand had spoken about that in some other Money Page video, I think, where he had said that India has become a nation of gamblers, where we are all speculating. Most Indians are now in the market speculating, trying to become rich fast. We have sold this dream that you can put 1,000 rupees and make it 10 lakhs in no time. So we get this crazy fever in the market which is going on. It's very hard for banks to compete against that kind of mania right now, other than wait for the markets to correct. When the market suddenly corrects severely, everybody will pull their money out of the market and they'll all go back to the bank and dump it in the bank.
And the whole thing will repeat. The people will deposit in the bank.
That's what Shashwat said in another video about the pendulum, how it keeps swinging between bear and bull. It's not an even spread, but the swing always goes on. From one extreme, from exuberance to fear, goes on.
So I hope that this video is informative. And if you like this video, please share it with your friends whom you think it will be helpful for them. And please subscribe to this channel for more kind of videos. See you in another episode with an interesting topic. Thanks for watching the video.
Thank you.